Okay, everybody, here we go. It is me, Gregory Mannarino, post-market report on this Wednesday, April 26, 2023. All my friends are here. You guys are awesome. You girls are awesome. I love all of you. I mean that. People, let me start this video off with this. First of all, okay, I am not, and I want to repeat this again, not joining the choir of crash callers. I mean, every week, you know how this works. Oh, I'm sorry I was wrong, but now it's going to be this week and next month and whatever it might be. But I'm telling you, right here and right now, there is something dark here. I was literally just looking at a few things prior to the coming out here with all of you, and it just doesn't look pretty good here. Um, it appears to me, okay. Let's see if this plays out to be true. All right, most of you know here, I went short this market yesterday after telling people to not be short this market for quite a long time. All right. Things just look pretty freaking hideous to me right now. We have a market, which isn't even a market, it's a freak show on an epic scale, so disconnected from any type of reality. It's just beyond belief here. Um, it's not just the stock market here. It appears to me, okay, and I'm just throwing this out here. I'm not telling anybody what to do, but I'm looking at financial stocks. I'm looking at energy companies right now in the overall market, looking at the S&P 500. It just doesn't look good. All right. It looks like something is brewing here. I remain short the market. As a matter of fact, you all know this. As I said, I went short yesterday. I bought puts on ticker SPY. I bought more today, just three more contracts. Look, I didn't actually. Let me be honest with you. After yesterday's sell-off, I thought we were going to get a little bounce today. You know how the market works. People always overdo things. Okay, we fell yesterday. I expected maybe a little bounce today and maybe a follow through tomorrow, but we fell yesterday pretty good. With regard to the Dow and the S&P 500 today, we had a decent follow through. If we get another follow through tomorrow, I mean, that would shock me. I'm telling you right now, I'm expecting a little bounce tomorrow with regard to the broader market. I'm talking about the S&P 500. So the Nasdaq did put on a gain. This is Microsoft. Okay, it's humongous market cap, enough power there to lift the freaking entire Nasdaq here. But there's so much other stuff going on. No, just sit down for a nanosecond and just take what I'm about to tell you in. They're already talking about another rescue. A rescue for the small banks. You remember how this played out? Oh, yes, there was the initial rescue for First Republic. It didn't work. Then apparently there was some other kind of a thing that went on over there, and obviously this bank is done. Okay, this is not over. The banking crisis is not over, and it's just more of exactly what you and I would expect to see as they're merging this entire system here. They're consolidating it. So there's talk of another rescue for the regional smaller banks. And we also know this. Assets of these institutions, they're going on sale, just like you and I expected. They're going on sale, and the big freaking Wall Street banks are going to swallow these things up for pennies on the dollar as they consolidate the system, ready for the rollout of their new central bank digital currency, for which I want to talk a little bit more about that, getting a lot of questions. And I was writing some stuff down here. So on the back of, again, a mixed market, Dow falling, S&P falling again, surprise to me, I'm not lying. I did not expect a follow through today. I thought we'd get a bounce today and maybe a follow through tomorrow. Let me just say this. If we do not get a little bounce tomorrow, at least something tomorrow, with regard to the S&P 500, it's pretty much look out below here. Nothing is going to go up or down in a straight line. You have to kind of, if you understand how markets work, it's not too hard to gain a perspective on this. Generally, when you have a big sell-off, you get a bounce. We had a bounce earlier in the day with regard to the S&P 500. All right. I just got a little lucky there, and I bought, like I said, just three more contracts. Uh, I don't know. We'll see how this plays out. But I don't like what I'm seeing underneath, not just the S&P 500, but I'm looking at the energy sector. I'm looking at the financial sector as well. This just almost looks like a black hole here. Okay. And there's a lot of effort right now to keep the debt market stable. Clearly, look at the 10-year yield today. Didn't do too much. Who's doing this? It's not you. It's not me. Obviously, this is institutions. This is the central banks. It's the Fed. They're buying all this stuff. Period. Dollar got hit today. Cryptos got hit today after being up earlier. You got gold putting on. I'm sorry. Gold suffered a little loss today. Silver had a gain. Crude oil got hit pretty good. It's wild. It's wild to watch all this stuff unfold, and then to hear the nonsense about rescues for the smaller institutions. What are they doing? They're going to try to prop up these smaller institutions until they can get absorbed into the collective of these larger institutions. They are being consolidated for a purpose here. Purpose to issue in the new system. Everything is lining up. All the little pieces that you and I talk about all the time, they're all just fitting very, very nicely. And I don't think it's going to be too far off. But again, they need a major event. A major event must occur for the switch from the current system into their new central bank digital currency system. You understand? So just watch for this. Now, speaking of that, now I was on an interview recently, and a question was posed to me with regard to cryptocurrencies currently as we know them, and what the Fed is going to do, central banks are going to do moving forward here. I want to clarify something because it seems that, look, first of all, let's talk about the crypto space. We're talking about a market capitalization in total of about $1.25 trillion. That's it. That's what we're talking about. For example, you want to compare that to, let's say, Apple with like nearly 3 trillion. I mean, it just doesn't even, the entire market capitalization of cryptocurrency, it's tiny in the grand scheme of things. But again, there's been a lot of volatility here, and there should be, as this is a new asset class. But when people are looking at the central bank digital currency and saying, "Oh, that's going to bring Bitcoin to zero," that's finally the thing that's going to bring Bitcoin to zero. How about no? And I will be proven to be right here, and I'm going to explain to you why very simply. Okay, when people today with Bitcoin or whatever crypto they like to hold, okay. Listen to the term, hold. They don't transact in them. They don't use them as currencies. Okay. They just hold these things. Completely different than what central banks are looking to do here. They're looking to have a central bank digital currency. Not that people are going to hold it, they're going to transact in it. It's a completely different animal. I hope you get what I'm talking about here. All right. I still remain a bull here. Why? People, my take on this. I can't believe I got to say this again, but you tell me, those of you that have been with me since a really, really long time, how is this going to work? Okay. We understand the debt bubble, biggest bubble in the history of the world. There's never been anything that comes close to this. Nothing. I mean, this is beyond, and I mean freaking beyond here. Implosion in the debt market is going to occur by design. Rates are going to spike in an uncontrolled fashion. Period. What's that going to do, people? It's going to have the reverse effect of suppressed rates since the last meltdown, and global stock markets are going to crater. So where does all this cash go? Does it grow little money wings and fly away into money heaven and just disappear? No, it doesn't do that. It just looks for places to go. Those of you that have been with me forever, you know that it's going to make its way into commodities. And I'm going to say it again, commodities. Why do you think? Do you think, for example, that I have posted lists of commodity exchange traded funds in my newsletter just for fun? Well, no, I put it there because look, do your own research on these things. All right. Um, I may be wrong, but I'm just telling you how I feel. I want you to think about it. Just don't say things just for the heck of it. Like, oh, Bitcoin's going to zero. Or Greg, you're wrong about commodities. Tell me why I'm wrong. Convince me as to why I may be wrong, but no one has yet to convince me that my scenario here of a meltdown in the debt market, destroying the stock market, cash moving into commodities, and yes, cryptocurrencies as well. Cash just seeks places to go. That's all it does. You understand? It's very simple. There are winners and there are losers. And if we can set ourselves up in the right spots, we can all win here. Now, I am not saying that anyone here should go all in on anything, including cryptocurrencies, or if you had to, if someone posed the question to me, Greg Mannarino, if you could only buy one thing, one thing only, what would it be? I'm waiting for an answer. Yes, beautiful. McCarthy, perfect. Exactly. Silver. I would buy silver. It's my favorite asset of all freaking time. And what do I base that on? What do I base that on, people? I don't pull it out of a hat, like some people do. Oh, this, that. No, it's because I look at the Dow gold ratio, gold silver ratio, and I believe we're going to get on par. Gold, Dow, 1-to-1, no matter where we go. Okay, this market is in la la land. It's in a new place. I can't think of another term other than la la land, and it's going to get real at one point, and people are going to sit back and wonder what happened, as they always do. It's astonishing to me. It just doesn't change ever. When the market melts down or some asset just skyrockets, well, who knew? Well, you did. Okay, it's just a very simple equation. What we do, you and I, okay, is we look at the bigger picture and we try to ascertain what the most likely outcome is. Not a guarantee, but the most likely. We're speculating. All of you here, we're talking about the markets. We're talking about commodities and gold and silver and Bitcoin and cryptocurrencies. And I'm trying to explain this all to you, why I believe the things that I do. Maybe I'm right, maybe I'm wrong, but people tend to know the truth when they hear it. Okay. And even if I am wrong, at least I'm telling you as straightforward as I can why I believe the things I do. I'm explaining my situation. You understand? So what do we got here? We have a banking crisis, which is still unfolding. We were told it was over. Oh, it was rescued. Everything was saved. Oh yes. No, not even close. Not even close yet. The consolidation of the system, again, it must be done to establish a pathway with FedNow and everything else for the new digital currency, which we're getting. We're getting it, period. Federal law overrides state law. So for those of you out here hoping that your state is going to pass some kind of law that's not going to allow digital currency, no, it's someone trying to buy votes. I hope you understand that, all right? If the Fed issues a digital currency, I don't care what politician is telling you they're going to write this into law. Look at someone who's trying to get some votes. That's all it is. First Republic, I just talked about it. It's not over, okay? Their assets are going on sale. This whole thing is just exactly what you and I knew it was going to be from the get-go here. So anyway, going back to everything else here. So just there's something going on, okay, with this market, and something ugly appears to be unfolding here underneath it. And of course, people are being told. As a matter of fact, check this out: Visa, the CEO of Visa, the consumer is in good shape. Really, they're in great shape. Meanwhile, let's see, 58% of Americans, working Americans, are living paycheck to paycheck. We have a savings rate in the negative here. People continue to borrow with consumer debt, household debt, personal debt skyrocketing out of control, along with credit card debt. It's an insane situation here. But again, these people, when they parade out the CEO of a credit card company here, to tell you, then they dictate your life, that everything's great, you know the polar opposite is actually true because this guy gets his multi-million-dollar bonuses based on how many of you out here are swiping and swiping and swiping and swiping. So you keep on swiping and put more cash in that freak's pocket. I hope you guys and girls aren't doing that. All right, don't do it. I don't buy a damn thing unless I can buy it cash. It's the truth. Anyway, mortgage demand down 28% year over year. That's how great people are doing. Oh yeah, ex the CEO of Visa, they're doing so great that mortgage demand over year is down 28%. Make that stuff up. And then we got this other thing going back to the regional bank, smaller bank. What they're doing here is exactly what you and I would have expected. Yet again, they're pointing their fingers at management, pointing their fingers at management, pointing their fingers at management. Meanwhile, what did we just find out? We found out that the regulators knew last October that there was a problem. The Federal Reserve knew last November that there was a problem. And guess what? No action was taken. Zero, double zero. I wonder why. Duh. I mean, people, come on, man. You all know this story. Anyway, so let's see what happens here. The question I have for all of you is, will this market bounce tomorrow? Are we going to get yet another drop? I don't know. I'll tell you, I was planning on holding my short for a few weeks, but I've already done pretty well with it. All those of you that got on board with me on this, I did not expect this, but okay. We'll see how it plays out. I just don't like what's going on. People, this guy loves you a lot. So what we're going to do, let me see if we got credit. All right, let's talk about a few things here. Credit unions. People, I already addressed this, but let's address this again here. I believe in the grand scheme of things that credit unions are safer. I'm not saying that anything is safe here, but why are credit unions safer? Because they're not for profit. You understand? They operate on a different kind of thing. Greg is my spirit animal. That's awesome. I love you guys and girls. Yeah, Mummy Man blaming the management of the banks. Of course, he has to. He has no choice. Anyway, yeah, so that's my take on credit unions. I think it's a better place to be in the grand scheme of things right here as they consolidate. We'll see. But again, look, everything has risk. All right. You walk out your door of the house, there's no guarantee you're not going to get hit by a car or struck by a bolt of lightning or whatever it might be. You know, life has risk. Every breath you take has risk to it. So you have to understand there's no such thing as no risk. Okay. Either it's just degrees of risk in everything that you do, honestly. Why would the market bounce? Great question, AG. All right, let's talk about this. All right, as I say all the time, no asset class, no market index goes straight up or straight down. Let's say you're in a bull market, AG. All right, it's a random walk here with an upward drift. You know, sometimes you get pretty steep drops, but that's how it doesn't go straight up. Nor when the market falls does it go straight down. Not even in a crash scenario. In a full-on crash, everybody runs to the door at the same time. You tend to get a massive drop, followed by a bounce, followed by a follow-through. That's how it works. No asset goes up or down, no asset class. That's just the way it goes. I hope I'm pretty clear on that here. Coco is out getting walked right now. I'll get him back on camera pretty soon here. We'll see how it plays out here. Yeah, like crypto, it's the same thing. You know, look, the cryptocurrency. You have to understand, people, when we're talking about cryptocurrency, this is the most least understood, I think, asset class in the history of the world at this point. Why? Because it's new. It's a relatively new thing, and on top of that, we were talking about a minuscule market cap. Right now, at one point, the market cap of crypto was about the size of a Dow component. We're about half that right now. But again, look, you know, if you're holding crypto, you're obviously not using it as to transact. You're not using it as a currency. You're buying it and you're holding it. Totally different than what the Federal Reserve wants to do. I personally believe you're in the right spot, and I think you need some in your portfolio. Greg Mannarino tells you all the time, you got to be out in a lot of different things. You got to be kind of spread out in a lot of asset classes, a lot of things, and then maybe be overweight in one thing or the other. Overweight meaning owning more. Let's say let's say you're a real gold or silver advocate, which I hope most of you are. You should be allocating maybe a larger part of your portfolio in that. You understand? PDBC, absolutely a long-term hold. You all know that. I've been over this 1,000 times. Same thing with JEPI, long-term hold, pays a nice dividend as well. All right, let's do maybe one or two of these things, and then I think we're going to call it here. People, this is almost a 20-minute video here. I want more metals. Yeah, I mean, I love them. I think, I've been telling people since day one to bet against the debt and become your own central bank. That's what it means. People write to me all the time. Hey, Greg, what does it mean to bet against the debt and become your own central bank? Become your own central bank. Do what they do. They're hoarding gold. Yeah, you should hoard gold, but you should hoard more silver as well. I have no doubt that these institutions are also hoarding silver as well, because they look at the same things that I do and you do. Dow, gold, silver ratio here. Yes, I am a silver addict. I'm right there with you, Mark, 100%. Where can you buy physical silver? I've used Atmex. I don't want to. I've used Atmex for years. I've used other places too. I like going to local places as well. Sometimes you can get some pretty good deals there. So there's a lot of ways you can acquire this stuff. And copper too. Yes, I like. Is this the big crash? I don't think so. And I don't want. Again, I'm not joining the choir. The big crash, people. Let me outline this again. If you're new here, maybe the person that asked that question is new. All right. The big crash is not going to start nor end in the stock market. It's going to start in its driver. What is the number one driver? We know the answer. Let's see who's first. What's the number one driver of the stock? Boom. Perry, I love you. You're fantastic. It's the debt market. The debt market is the driver. The debt market is the key to the markets, all of them. Everything derives value as to what is occurring in the debt market. Right now, the debt market is pretty damn stable. And this is an enormous amount of effort being put in here by central banks who are buying it all. That's what they're doing. They're buying it all, okay, for the inevitable meltdown of this entire thing. And I think it's going to be epic on an unbelievable scale. You all know that. But until we see an uncontrolled spike in that 10-year yield, which will drive the MMRI, like who knows where, way over 300. We're still in a high risk zone, even though the MMRI has come down. I think it's like 217. Last time I looked at it, again, free to everybody. Link in the description of this video. I hope you're paying attention to that. But what we're seeing now in this market, markets fall. They generally supposed to, except now it keeps getting propped up, then propped up and propped up. But people take profits too, and you want to capitalize on that. At least I do. At least look, there's a lot of ways to stay ahead of the curve in this situation here, and looking at the bigger picture, understanding why we're betting against the debt, becoming our own central bank. Period. We got it down. Nobody is more ahead of the curve than us. I really believe that. I honestly do. I'm out here every day, twice a day, laying it out for you. My newsletter, I'm pumping stuff out there for everybody to kind of a better handle on what's going on. What else can I tell you, people? All right, let's kind of call it here. I think this is a long video. It's 23 minutes here and change. I really appreciate those thumbs up. I see we're doing better today. I got 1,311 people watching live right now. I got 469 thumbs up, 472. Thank you. Let's see if we can break 500. Can we break 500 by the time we end this year? Come on. Thumbs up, please. They're very valuable. Honestly, when those thumbs up really do look at that, 524. Thank you. Allow people to see the video. And I think this stuff is important, people. Right or wrong, I come out here with all of you. This is a team effort. This is not, look, I play off of you guys and girls here. We got this. This is a family to me. You know how many times I want to quit and I don't, because I feel a responsibility to all of you. I come out here. I get up at 4:30 in the morning just so I can come out here and do a pre-market report. I go, no, not now. But I do it because I think we count on each other. And I think that's just so important. Yeah, I love all of you too. Honestly, it's the truth. All right, that's going to be it for today, people. Again, thank you. Thank you for those thumbs up. Please share the video, get it out there, and comment. Where did I get it wrong? Where did I get it right? Am I completely out there, or am I kind of on target? Please let me know. I'll read the comments. I will see all of you in the morning. Thank you.